Hello YouTube, it's Steve here, and we have had quite a day. As you can see, just gonna hop right in here on the S&P chart here on my 8-hour time frame. You can see how on the overnight there, we were coming down hard, and then completely just rallied right up to the top. And I'm gonna go down to a lower time frame to go over that in a sec. But then you can see we just kind of came right down here and crashed, and so I've gone ahead and marked off a support level here at about 4,500 because as you can see going back now, that's where I'm kind of putting our near-term line in the sand for all this, because we've already come down lower than our previous all-time high from back in September over here. But anyway, without further ado, let us take a look at a lower time frame. So I actually did benefit from the overnight trading session. As you can see right here. Let's see. No, that's a little bit too close. Here we go. All right. So I actually shorted, and then before I went to bed, I set a trailing stop on it. So at some point, I think right around probably here, I ended up getting stopped out on that. Came out with I want to say 14-point gain or something like that. I don't remember the exact number, but anyway, I ended up hopping on the computer when we were sitting up about here. Then was kind of scalping a little bit, moving on towards the open. The open was absolutely dreadful for well, just about anybody who was trying to catch any trend here. Unless you picked the top of this wick, decided that okay, if we hit that again, we're going to go short, and then did that over the course of a few minutes, because then you made a pretty nifty gain here. But as you can see, coming off of the open, we came down from 4,600 all the way down to about a low of 45.56, and that's over the course of just a couple of hours. So that's a pretty solid move. And then with a rebound about half that distance to 45.85, give or take. And then from the rest of the day, minus this one kind of mini rally, it was all pretty much down the hill from there. So if you're a trend trader like I am, then you were having a fantastic time. And of course I did for the most part, other than the opening here, where I got chopped in and out about, I don't know, 2 or 3 times for about 3 or 4 points each, so not too bad, considering I was catching all of the big moves afterwards off of my volume tick chart. So I contemplated kind of keeping a short position open here, but given how much it came down, I decided against that, and probably for the best, because we've kind of been really, really flat for the most part. The volume tick chart doesn't look a whole lot better than that. We've printed, I think, like 3 bars at this point. And there's been very, very minimal movement. So moving back over to the 8-hour here, when I get up in the morning, if I see some progress starting to be made, then I'm probably going to be hoping that it's going to go downwards, just because how the saying goes that the bulls take the stairs and the bears jump out the window. If we start getting any sort of downward momentum and we break through the 4,500 mark, I think that we could see a pretty solid chance of it going down a whole bunch. I know a couple of the Twitter guys were calling 44.20 as their number. There's a couple of ranges that I would probably mark, 44.76, but of course that's a quarter of 100 points down, so that's a pretty obvious point to take a look at. I'm pretty ad hoc when it comes to picking my support and resistance levels. I just kind of pick places where there was a whole lot of buying and selling all at one area. Like right here, we've got this point, this point, this point. It's pretty solid. Moving down, kind of in this range, but it's pretty choppy, because we also have this area as well as this sort of channel here before it had this breakout, or almost a fake out really, as it came back down and before rallying. So we'll have to keep an eye on that. As you can see, our equity balance is up to about $102,000, so we're up significantly from where we have been over the last week, because we kind of bouncing back and forth between like 91, 93,000, something like that. So we are up a pretty good amount. The one change that I made today that I can remember off the top of my head to this portfolio was at the end of the day, I swapped over to a long position on gold. All of the inflation fears just kind of shot it right on up. I think it was like a 40-point gain or something like that. Yeah, 30.8, close enough. Um, I mean, like I was looking at it from like all the way from the night before, so you know. Um, so we are going to keep this long for now. We are up in the breakout zone here of our oscillator, plus the inflationary fears. We are a little bit green after hours, not too much. I'm terrible at trading gold, as you have all seen at this point. So we are just going to pray that this does not drag us down anymore. Really, the fact that I've been doing so badly on gold and the Russell is kind of a testament to how good this strategy works for the stuff that I'm actually good at, where we're still gaining despite the fact that they've got an equal number of contracts between the S&P and the Russell, and gold and, for example, oil. Moving on to copper. I talked yesterday about how I was going to hold on to the long copper position where we were sitting down right down here, because we were kind of hovering right around the support level that I've been marking, and it appears that that was the right choice to make. Copper is a lot more of a price action sort of technicals based metal than, for example, silver, and gold trades, in my opinion, more like a currency. So I'm less familiar with trading copper, but I am confident in how I am trading it. So we're going to, despite the fact that the oscillator says we're going to go down, I'm going to use my discretionary decision here to say, well, we briefly came down below the support level and then came right back and rallied above it. So that's my discretionary reason per the rules of the experiment, where I have to have a reason for whatever I do, except for exiting out trades. On to crude, which has continued to not really disappoint. We rallied pretty hard up into the afternoon, then kind of came back down. I wouldn't be surprised if today is bearish, simply because of how the candlesticks are here. It's almost like a shooting star. Excuse me. But at the same time, we've also got all of the inflationary stuff, all of the energy demands, and all of that. Although I did see a headline today that Texas apparently says that they think that they are going to be just fine for the upcoming cold snap. So that kind of lays the fears that I've been talking about with natural gas, and we'll get to that in a minute. But yeah, the whole natural gas situation over in Europe with the Russians and all that in Ukraine, that was kind of driving up the price of oil, along with the oil war that they were doing with the Saudis last year and all that. So we will have to wait and see, but for now we are still steadily in breakout mode, although we do technically have a cross, as denoted by the fact that you can see it highlighted over the rest of the highlight here, which is one of the neat features of the code that I'm using here. So natural gas, we actually went short, which, given what I was just saying about how what Texas was saying, this seems to have been a good decision. Of course, I made this decision without actually knowing that Texas was going to say that. And I don't even remember who it was, if it was like their Department of Energy or one of their power grid corporations or something like that. I just saw a headline. I didn't really pay too much attention to it because I was focused on the S&P and everything else today. But so we are kind of sitting on the ceiling of this little base from where we were entering before, prior to this breakout and all that. So we'll see how this goes. We are still higher than the average natural gas price over the macro period by quite a bit. So with those fears of Texas's power grid allayed, I think there's a fair chance that we could actually see a pretty hefty move down, but I'm not going to make any predictions. I just look at the charts. That's all I do. The only stuff that I really know about is oil and the S&P. On to Treasuries. We had a rally today, and the day before, I guess technically. Oh wait, no, sorry. Yeah, this is the 20th. I got mixed up a little bit because we're after hours. But anyway, no, we had a green day yesterday, and then it looks like we had a gap down during the well, I don't know what you would call it, the turn off period, before the market reopens every night. But yeah, no, it looks like we had a gap down from that and then moved back on up. Um, Although it is kind of odd that it's showing a negative up there on the price movement, um, as well as over here. So I'm not sure what's up with that. That's probably a quirk with TradingView, actually. But anyway, we are going to stay shorting the bonds here, and I imagine the 10-year is going to be the same. We have come up a little bit from the lows, but we're still sitting on 7.5 grand of gains on this trade. Certainly one of the more surprising trades that I've made. Clicking over to the 10-year, same exact thing here, although with a bit of more pronounced drop. However, the tick value is a little bit lower here, so that's why the numbers aren't quite as pronounced. Um, yeah, nothing really to add on to this because we just covered it on the bonds. Let's move on to silver. Silver has broken out of this range. It is doing fantastically. Silver, as I've mentioned, I like silver. I really do. I like trading it. It's really, really easy for me. It's one of those ones, just like the S&P and oil, that I'm really comfortable with. Um, some of my best options trades back when I did that primarily were on silver, SLV. And so we're going to keep this right where it is. We are in a breakout mode here with our oscillator, sitting on 8 grand. Not bad. Um, Even the Russell, we are up today, because I swapped over to short last night after noticing that if I'd been paying attention on my 8-hour chart, I should have done it several hours before. But that's neither here nor there. This is an experiment. I wasn't actively watching the Russell. It's not my primary instrument yet. I'm working on programming a bot to do this for me because, frankly, I don't know how to handle it quite yet. So once I get a strategy that is statistically viable, I'm going to program a bot to do that through TradeAbate's API system, uh, which is fairly easy to work my head around. I'm used to programming robots and industrial equipment, but it's a uh, JavaScript. I think I'm gonna have to take a look at that because I know one of the brokers out here uses C sharp, which might actually be Ninja Trader. Um, they were also on my mind because TradeAbate was just acquired by them a couple of weeks ago, or I think exactly a week ago was when they announced it. But again, that's neither here nor there. So to cap off, yep, we're sitting on 45.27 and 3/4. Ooh, just bumped up there by another 3/4. Okay. Glad that I did not short the close, although I was shorting basically all the way down. But I have a bad habit of cutting my gains a little bit too early, just because I'm so used to the price action being like, oh, you're up 5 points. Well, now we're going to do a heavy reverse, and there goes your 5 points, and we're going to take 2 more from you. And this, how trends kind of do that sometimes. Today was a fairly easy day to trade, though, minus the open. Like, even the 1 minute chart is really not that choppy. Although I prefer to do like 3 minutes at a minimum. But yeah, now you can see exactly how far that fell. Um, Even the 3 minute chart, riding it up on the MACD, riding it down on the MACD, little bit of a rally, then it falls off a cliff and immediately switches bearish. Or even the stochastics could work. I actually originally designed the parameters for the modified stochastics here for the 3 minute on the NQ. So, although it actually works really, really well in the volume tick chart, and that's exclusively what I use to day trade at this point because it shows me what is happening rather than what did happen. Which is one of the weaknesses of indicators in general, is that they give you lagging information. But with a volume tick chart, it's a lot more responsive. So I'm going to stop this here for tonight. It's getting a little bit late. I honestly forgot to make the video, and then was like, ah, crap, I gotta do this, because a whole bunch happened. So I will see you guys tomorrow.